I really hope that today my internet doesn't crash while filming a video like yesterday. Yesterday's video was very unfortunate because, well, my internet went down to Chinatown as I was recording a new video. So today my internet looks like it's pretty stable, but let's go ahead, knock on some wood here. Happy Thursday for everyone out there, and welcome if you are new. If you are new, do me a big favor. If you enjoyed today's episode, smash the like button, as always, completely free. If you want to see more content of me, especially want to follow me along on my buys, also my public account for this YouTube channel, which is right on the screen here. Think about subscribing. This YouTube channel is relatively new. I have not advertised it just yet among my other YouTube channels, Nightmare RH on YouTube. But I'm probably going to advertise this YouTube channel in the next couple of weeks once post-earnings pretty much takes off. I am doing a public account challenge, which you are seeing right now. Looking to take this sum of money here, 43,000 some change, to 6 figures in the course of 17 months. The account challenge started to January of this year, baby. And we've been buying stock left and right, especially with this drawdown. I did buy a new stock here today. I'm going to be talking about why I did that and also what stock. If you are a returning viewer, you probably can already guess on the screen what stock I did buy. And then I really want to dive into SoFi. Yesterday I talked a lot about AMD and also SoFi, but SoFi did drop some news that I do want to cover from yesterday that I didn't get around to. So let's go right into it. What stock did I buy today? Or rather, let me go ahead and show something relatively quick. So the account challenge that I'm doing for education purposes and motivation, pretty much showing people that you can take X amount of money. You can take a couple 3 figs to 4 figs, couple 4 figs to 5 figs, take a couple 5 figs to 6 figs, even 6 to multiple 6, or multiple 6 to 7 figs. It's called having a strategy, sticking to your strategy, and understanding when there is a drawdown happening, it is the time to buy. If you've been following me for the last 6 months, I have bought a lot of stock. Hard cash. A lot of stock. Lots of stock. Well over $60,000 now. Actually, probably even closer to maybe $65,000 worth of stock. And I am setting myself up for a phenomenal amount of money to be made in the next 12 to 24 months. Is going to be very, very big. Very, very key and pivotal things are going to be happening to all these assets. But this profile right here is very a risk-on profile, but still, you can be in risk-on assets and you can still make a tremendous amount of money. But you got to be in the right risk-on assets. I've been in the wrong risk-on assets, and I've gotten my bum pulverized. It's all about the management team. That's pretty much about it. So, fun little account challenge that I'm doing. Initially, this account challenge was 18 months. Now it's 17 because I deposited a large sum of money. I have $4,500 left to deposit, but I'm preloading my $500 a month. Every month I deposit $500, but I'm already preloaded until August because why? Well, there are so many opportunities in this market. I could very well do large deposits, but then it's going to be 17 months down to 16. Like I said, initially it was 18 months in Cedral. I do get asked this question a lot. Why don't I just deposit the remaining $4,500 into this account? Because it's called discipline. You got to have discipline, and you don't want to blow your cash all too quickly. Big lessons to be learned. A lot of times people go all in, and I don't really like using the term all in because it really, unless the market is doing a COVID-19 crash or unless the market is doing a great financial recession, that is very different. But Liberation Day last year, I did go all in. And the reason being is because the major indexes were down by friggin' 20%. It was a full-blown, pretty much, like, crash. So, this correction that we've been in the market, the last, I want to say, definitely the last couple months, but theoretically, we've been in a drawdown since really pretty much around October, November last year for risk on assets, primarily AMD, SoFi Hood, Adobe, Palantir, Meta, PayPal, Oracle, ServiceNow, new stock that I just bought, and many, many others. We've been in a downward cycle, okay? I still have plenty of cash left, and I don't know what the future is going to hold. Later this year, maybe we go into another drawdown and there's other opportunities to pick up. So, what stock did I buy here today? ServiceNow. Why did I buy this? Well, ServiceNow just had their earnings yesterday, and as you basically pretty much see, we are, 17%. Why? You know, what could make this stock go down by 17%, and why did I start a position? So, a lot of companies, pretty much, that are experiencing SaaS apocalypse, okay? I'm a very big Adobe bull because, one, I use Adobe products every friggin' day. Every day I use Adobe products. I don't believe the nonsense. I don't believe the noise. Adobe is a very, I want to say, more stable type of a growth of a business model. Now, CRM, Salesforce, and also ServiceNow, they are very much cash kings in a way. Salesforce is definitely a cash king. So very, very different, so to speak. But I was actually talking about ServiceNow a couple weeks ago, and I'm like, man, you know, we're having a good recovery on ServiceNow. We basically pretty much pushed up to the 50-day moving average, and it's, you know, if I had to pick another SaaS software company to really get in, it would definitely be ServiceNow, followed by CRM. Even Microsoft is doing honestly well in the last couple weeks. Obviously, Microsoft is down very much right now. They have their earnings coming around Wednesday of next week, which is going to be Apocalyptic Wednesday. We got SoFi, baby. We got ServiceNow. We got a lot of other companies. We got the Fed, the FOMC meeting. Oh, man, it's going to be crazy. Next Wednesday, mark your calendar because I'm probably going to be buying more stock. I mean, I'm probably going to end up preloading my account all the way until probably December in the next couple months, which is going to be pretty funny. But I mean, hey, whatever, man. I'm setting myself up for a great 12 to 24 months, especially with this profile on this YouTube channel here. And by the way, on my other profile as well too, I'm a raging SoFi bull. I have shown my SoFi position. I'm holding 1,642 shares, baby. Whatever I do on my public account, I do also on my private account as well. So understand that I am a very consistent investor and also consistent trader as well too. And honestly, not really financial. I'm not a financial advisor, but you should also be very consistent as well too. If you have multiple profiles out there and you're taking a relatively long position, definitely more than 12 months, well, if you're buying it on one, why not buy it on another? Pretty much, right? If it's going to be a win-win chicken dinner on one profile, it's probably going to be a win-win chicken dinner on another. Now, obviously, if you are a day trader or strictly a trader, that's very different. But even you can make the argument of just, hey, the more shares, the better, right? So anyways, ServiceNow. Going back to ServiceNow, where are you? ServiceNow is actually joining my club of stuff here. So ServiceNow ended up posting earnings yesterday, and you can definitely watch. I'll go ahead and make it easy to you. If you are a ServiceNow shareholder, you can definitely listen to the earnings call on their website. I'll go ahead and put this link down below. Pretty much in a nutshell of what's going on with ServiceNow. One, they're very much profitable. If anything, you can make the argument that they might be a little bit too profitable. Okay, maybe that's a bad joke, right? Yeah, maybe that really is a bad joke. To really sum up everything in a nutshell, pretty much just typed in to AI to get a quick little summary, kind of really organizational. And by the way, use AI to your advantage. I use AI every single day. Use AI as a tool to gather resources. Obviously, you have resources right here, and understand how to properly use AI. Obviously, I'm not using AI to make investment decisions, so to speak, but I'm using AI to gather information. And Google Gemini is actually, in my opinion, very spot on with a lot of this information. But despite beating analysts' expectation for the first quarter, ServiceNow shares plunged roughly 14% in after hours. Disconnect between strong financial performance and stock massive drop caused by three primary factors. Geopolitical headwinds, the Middle East delay. Keep that in mind. Geopolitical, okay. Margin pressures, okay. From an acquisition, okay, margin pressure. Number two, a crisis of patience regarding AI. So just by looking at these three things, geopolitical, margin pressures from the acquisition that they did, and also a crisis of patience. Do I need to really spend any more time on this? External factors are causing this phenomenal company to go down. Could I be totally wrong? Could these external factors take out this company? Oh, absolutely. But that is the risk that I'm willing to take. And it's also the risk that I've taken in many, many other positions. It's the risk that I've taken in buying Robinhood, because obviously we are in a Bitcoin downward cycle, and I have bought over tens of thousands of dollars worth of Robinhood shares. So I'm willing to take that risk. Obviously, we are in a banking downward cycle around no interest rate cuts and also around potential recession fears. SoFi, I'm willing to invest tens of thousands of dollars. And it is something that me personally, I'm actually willing to do. But in a nutshell around ServiceNow, they're really facing a lot of external factors that are causing this company to go down. I want to talk about ServiceNow compared to PayPal. PayPal, on the other hand, they're not necessarily facing external factors, okay? They're facing, oh, hang on one second. I didn't actually show this. Hold on. Gotta go ahead and bring this up right now. Summary of the beat. Subscription revenue from ServiceNow up 22% year over year. They're growing. AI momentum, over 1 million grew by 130%. Still growing. Share repurchased. They doubled down on their confidence by repurchasing 2.25 billion of their own shares. I wanted to actually throw that up there before I totally close that off the screen. So, PayPal. PayPal is a position that if they do turn positive, which they very well can, PayPal very well can turn positive, I'm going to start scaling out of this position relatively quick. Why is that? Because their CEO was given the boot, and their management team is really in despair. ServiceNow's management team is not really in despair. It's all external factors. Just like how Adobe, just like how Robinhood, Palantir is obviously going through its own little problems of a lot of people saying, can this company sustain its growth rates? But that's not really necessarily a management team. The management has executed time in and time in again. Out of all these stocks that I own, look at AMD. AMD is green right now when the market is very red. Look at this. AMD. You got Adobe is lagging because of obviously ServiceNow. Microsoft definitely taking the hit. Middle Eastern concerns. The major indexes are red. And AMD is showing signs of life. Oh. You know, I said this months ago. Maybe I should have bought more. Maybe I should have pushed my total cost on AMD to like $11,000. The management team at AMD is just it's awesome. We are on a rocket ship right now. So with AMD, SoFi, Robinhood, Adobe, Palantir, Meta, yeah, Mark Zuckerberg spending money, but the guy's a baller. He's an innovator. Even Oracle, ServiceNow, only one stock that I own is going through a management crisis, and that's PayPal. So when you are seriously picking stock or companies, that is how I think. And I'm not the only one in this boat that actually thinks the same way. What is my plan on going forward? So, when Meta definitely shows more sign of life, I'm probably going to scale out of Meta a little bit more, depending what happens during earnings. If we get some good vibes on earnings, I very well may sell another share of Meta, roll that money into ServiceNow. If PayPal starts coming back to life a little bit, I'm probably going to roll that money into ServiceNow. Palantir, I've talked about significantly. When the market goes risk on, Palantir is going to go risk on again. But there is a lot of hard troubles ahead for Palantir, not as a company. The company is growing like a beast. It's about the growth rates. Can Palantir sustain its growth rates? So I may scale out a Palantir a little bit, not close my entire position, but sell some shares, and I'm going to be rolling this money very much into ServiceNow. I see a great opportunity for ServiceNow once all those external factors pretty much goes away. Kind of like how the external factors are going to go away for SoFi in the banking sector relatively soon. So, yeah, I see a opportunity for myself, and I'm not the only one too. Okay, so to really talk about SoFi and wrap up today's episode here, SoFi dropped news yesterday. SoFi expands home lending to give members greater access to home equity and support across home ownership journey. Very bullish things that SoFi is doing. Obviously, they talk about VA loans here. Where are we? VA loans, FHA. My first the first house I bought was actually with an FHA loan. I'm a veteran. I've used my VA loan before too. All great loans, especially FHA for first-time home buyers. If you are a veteran, you got to be using your VA loan. I mean, it's your benefits. You've earned it. Definitely take advantage of it. But all this stuff is really good. And SoFi is setting themselves up for what? They're setting themselves up for when the real estate market unfreezes, which is probably going to be relatively soon within the next 12 months. We have a new Fed governor coming in. The Fed governor may or may not give the market a complimentary rate cut. There's a lot of rumors and a lot of speculation saying, hey, the Fed governor is going to come on in and the Fed governor is going to say, hey, I'm going to give one cut as a complimentary to the market. And then it's going to be all about inflation, and it's going to be up to the Trump presidency to really go ahead and wrap up the stuff in the Middle East, get oil down significantly, make sure that inflation stays low, and make sure the Fed's fund rate pretty much is in line with inflation, which right now the Fed's fund rate is actually very much higher than where inflation is. And there's this big debate about if you're looking at true inflation versus not true inflation. I honestly really don't know. I'm just really a small fish in a big pond. But I will definitely lean with the people that very much say the Fed's fund rate, which means the Federal Reserve's rate, is much higher than where it should be. Okay? Especially the Federal Reserve, they want to be printing a lot of more money. So it's a tricky situation. But why would they be printing more money? That's a big question. Are we heading into a recession where interest rates would more than likely be going down significantly? Or are we going on a bull run like we did in 2020, essentially, in 21? I can't really predict the future, but I try to do the best I can. And the way that I really look at SoFi is that they are looking at the future of the housing market being unfrozen. And how is that possible? It's because interest rates have to come down. So if the housing market is going to be unfrozen, SoFi is, oh man, dude, it's going to be rock and rolling. Okay, everyone, to wrap up today's video, hopefully everyone is staying positive. If you find value in today's episode, definitely drop a like. Tell me if you think I'm utterly bananas for buying the dip on ServiceNow. But I mean, I'm excited to be a ServiceNow shareholder. First time shareholder of a ServiceNow, baby. And I definitely see phenomenal upside to the future. As always, hopefully you all are doing well just in every aspect of life. New video tomorrow, so stay tuned. And later.